Well, this is Dr. Buddy Crum here with Don Wales, and we're so glad to be with you today. You know, you're hearing a lot of advertisement and try to induce you into buying penny stocks. And it's such a attraction because, my goodness, I can get into a stock for less than $1 sometimes. Yeah. And even 1 cent. There's some down to 1 cent. And you think, well, if I buy it for $1 and it goes up to $2, I've doubled my money. But there's some things about penny stock people don't understand. But we always know that in a market, for something to sell, it's got to be advertised. The people that advertise penny stocks or don't advertise them are what we call a secondary market. Somebody has to make that market for you. It's called a market maker. And you have underwriters who take a company public that get paid up front in commissions, or those that participate in the journey. And they have an incentive to keep that stock active. It is, as we all know, a market of auctioneers. I mean, somebody's got to be the auctioneer to drive up the price, and somebody's got to make that do it. Now, earnings are always important, and obviously it wouldn't be penny stocks if their earnings had been consistent. That's right. But here again, if you look at it, you have to look at quickly, like we talked about stock. Look at who is the management, but importantly, who is making a market for this company? Is it a big company that's called a market maker, or is it somebody that is just not really pushing the stock? And thirdly, not only do they have a good succession market, because oftentimes the starter of a company is not necessarily a good business person. That's right. And they get that money so they can have money for expansion, but don't know what to do with it. And is there a market for the product? And a penny stock, as attractive as it is some of the very highest risk you can invest. So I just know we get a lot of attention on at this time when people are looking for bargains. It's like looking for a bargain, a penny stock.
And the attraction to them, which, again, as you mentioned, is that everybody can always point to, if you had bought this, if I'd have bought that penny stock and put for a pretty small amount, usually you can get a great return. I can put $1,000 and make $100,000. That's usually the appeal to them. It's the FOMO, the fear of missing out, and that's how they sell them many times. And a penny stock, by the way, is a definition of any stock $5 or under. That's how the Securities Exchange Commission tracks them. They trade over the less regulated, over-the-counter pink sheets, and that's not as regulated. So they carry a much higher risk. They have a great, big potential upside if they make it big, but more of them don't. And usually penny stocks are generally floated by tiny companies that have low market capitalizations. And so it makes them riskier. So don't fall into somebody selling you. If you're really interested in them, you've got to do some research. You've got to really do a lot of research, put a little bit in. Don't treat them like gambling, where you say, they say this is it, and I'm going to throw 1,000 and I can make 100,000 or 1,000,000. That's not the way to invest. That's not good investing. You want to do a lot of research on that before you do it. Talk to somebody who knows, not somebody who's selling you something before you get in, because they are very high risk. And generally, we recommend people stay away from them unless they've done their due diligence and they really know.
And one more thing about the due diligence is you need to look and see how much stock is outstanding.
Yes.
Because oftentimes if there are thousands and millions, even sometimes thousands of shares, and the earnings go up a fraction, and you're invested with another 30,000 people, it's not going to go up for you very much.
That's right. Very good. So be very careful when you're looking at penny stocks. Do a lot of due diligence. For the most part, they're usually better to avoid, and stick with some of the things that you know, stocks, bonds that have been proven. I hope you enjoyed the broadcast today. I hope there are some things that can really help you to get investing or keep investing. That is our desire here. I wanted to make quick mention of helpmeinvest.com. Helpmeinvest.com. An organization that we've put together. There's no fees. There's no products to sell you. It is literally designed to help you invest, to become a better investor. So you can go there, set up an appointment for 30 minutes. We'll spend some time with you. We'll go through your portfolio. We'll help you get started wherever you're at. Helpmeinvest.com. I hope you'll take advantage of it. I hope that you will continue to send in your questions. They mean a lot to us because we can talk about a lot of things, but what we really want to do is find out what's important to you, the level of understanding, the questions that you have. So hopefully that we can add value to your investment knowledge and that you can increase and grow in that and stay curious and read as much as you can, get as much information. But when you have a question, please feel free to just send that in to us. Send those questions in because we really do enjoy them, and answering them helps us to make sure that we're being relevant and pertinent to you.